A lot of companies and countries have started seeking an alternative reserve asset. Gold has been the main beneficiary of that so far. But as you pointed out, a lot of other nations and companies have started to add Bitcoin to their balance sheet.
Welcome to the Next Level Income Show, where it's our goal to take your income, your investments, and your life to the next level. I'm your host, Chris Larson. If you haven't yet, get a copy of our book for free at our website, nextlevelincome.com. That's www.nextlevelincome.com. Just click on the book link, and I'll even send you a copy if you put your address in. All right, strap on your seatbelts, because today we have John Gillen of TRU Capital. He spent 6 years on BlackRock's Aladdin platform in client services and relationship management before leaving to co-found TRU Capital, an algorithm-based digital asset investment fund. John studied the economics of digital assets at the Wharton School of Business and has consulted for several successful projects as an expert on the Web3 space. He hosts a great podcast, the Milk Road Macro Podcast, and is a leading researcher on crypto and digital assets. In a short period of time, we're going to cover a lot of material here with John. Stay tuned. John, good to see you.
Good to be here, Chris. How are you?
Yeah, I'm great. It's good to have you on the show. We're going to be talking about really how the landscape has changed in the investing world over the last few decades. I'll never forget. I started investing when I was a freshman in college, buying just ETFs on Vanguard, and I was day trading. I was swing trading in college, and I moved towards probably the slowest investment you could get into, which is real estate. And a lot of our listeners are familiar with alternatives, specifically real estate. But we're going to be talking about the whole opposite end of the spectrum today. And one of my favorite authors is Michael Lewis. And he wrote, he was talking about, what was it called? Not Lightning Boys. Do you remember the name of the book? I'm going to have to look it up now.
I know he's a famous biographer of investing people, and he wrote a book on SBF and some other people as well. But
I'll tell you what, I'm going to look up that book. It's called Flash Boys. That's what it's called. It's called Flash Boys.
Oh, okay.
Yeah. So I just remember reading that and thinking, man, I'm glad I don't day trade anymore, because I would just be getting hammered by these traders that are out there literally laying fiber optic cable across the country, to beat retail traders and those sorts of things. But John, before we kind of dive in here, I would love for you to share with the audience your background and how you came to TRU Capital.
Sure. Yeah. So my name's John Gillen. I have been in New York for many years at this point, but so my career has taken a bit of a circuitous path. I started at the University of Virginia and got a degree in systems engineering and economics. And from there, I did a couple of different jobs. I worked in consulting at Accenture. I worked a little bit at a hedge fund. But I landed at BlackRock and spent 6 years there on the Aladdin platform in client services and relationship management. And so that was a great way to get a really I said, it was like the best high school on Wall Street, but it was a crash course in a lot of how asset portfolio management works. The tools are involved, different stakeholders, how they collaborate and communicate with one another, and just thinking in terms of the language of risk and all these different things. So in that perspective, in that role, I learned a lot. I worked a lot with our clients, who were primarily portfolio managers, traders, risk officers, research analysts. And so I got to know their role and how they leverage the tools on our software platform quite well. And then from there, I left. And while I was there, I was working a little bit with our digital assets team on some projects that BlackRock was doing internally. So there was a lot of exploratory efforts going on around certain projects, and they'd settled on a few different things. They did this minority investment into Circle, and worked on USDC and managing the reserves for that asset. And then there was an integration that we did with Coinbase, between Aladdin and Coinbase, that I got to help out a little bit on as well, which was great. And then I got to go work with BlackRock at some digital asset focused conferences, and really get like a firsthand exposure and face-to-face meetings with a lot of the people who are building the future of digital assets and the future of finance. So that was a great experience for me there. I really enjoyed that. I got to learn a lot and worked with some wonderful people at BlackRock. I left in February of 2025 now, which seems like much longer than a year ago, but yeah, and so I left. I've been working on this fund, putting together this fund with a couple of different partners. It's called TRU Capital, and still in the process of capitalization and going to market with a lot of these things. But we've got a pretty robust performance and price history on some of the fund. And we're in the process of still taking that out and seasoning the market, I think is the word for that, and like introducing investors to the offering that we have. But the idea of True Capital is to bring institutional grade quality of every stack of the fund to the market. So we have a institutional quality custodian solution, proprietary institutional algorithmic trading solutions that backstop the fund. We have a suite of algorithms that do that. And then we also, have a long view of the digital asset class. And so we're not falling into the common pitfalls. And I like to say we avoid the pitfalls and predators of the space, but still allow capital to stay long in the asset class and to participate upside of this new emerging asset class. So that's a little bit about True Capital. And then I'm also, in the last 6 months, I've come on at a media company called Milk Road, and I host a podcast on macroeconomics, digital assets, and just generally, financial markets. So it's been a great way to learn a lot because I interview experts all the time and get their opinions on things. And so it helps me stay very tight focus on the market and kind of up to date with what's going on, and build relationships with a lot of leaders of the industry. So it's been a really great experience. And that's a little bit of who I am and how I got here and what I've been up to.
I love it, man. I love it. And yeah, it's a great podcast. It's great if you want to learn more about the space and get some macro economic education, which I think is important no matter where we are, what asset classes you're invested in. John, I want to take a little bit of a step back for the audience because not everyone is familiar with kind of the new digital assets that are out there, and there's a lot of confusion. You go on Coinbase, people are like, oh, there's Bitcoin, but there's so much more than that. You mentioned USDC. If you would give a little bit of a primer for the audience on, what digital assets are and, how the landscape has expanded over the last decade. Because we used to just have, we had our large cap, we had our small cap, we had our value stocks, we had our emerging markets, international, et cetera. And, there's a huge landscape out there, and we've seen a huge explosion in, not just Bitcoin, but also other tokens, other types of cryptocurrency. We've seen, meme coins, and now we also have like USDC and, the digitization of, I'll say legitimate currencies or, your typical currencies that are out there. Do you mind diving in and, like I said, giving a bit of a primer for our audience on what digital assets are in some of the different categories?
Sure, absolutely. So there are as many different kinds of digital assets, I would say, as there are different kinds of assets in the world, right? It's just that this is a digital instantiation of them. So what does that mean? So you could say Bitcoin as one example. That is the native asset of the Bitcoin network. So the Bitcoin network is distinct from the Bitcoin asset, right? So if you want to make a transaction of the Bitcoin network, you do that in Bitcoin's native asset, which is BTC or Bitcoin. So it's you use just the one word Bitcoin, but it can refer to different things. It could refer to the network nodes and node operators, or it could refer to the native asset. Same thing with Ethereum. Ethereum is a different kind of blockchain ecosystem than Bitcoin, and Ethereum has different distinctives about it that make it unique or distinct from Bitcoin. The biggest one is that it is programmable. So Bitcoin is kind of just like you can transact it from one wallet to another. At the base level, that's the core functionality that's built into that asset. But Ethereum, you can do things like build smart contracts. And so that's like kind of like creating a digital vending machine. So a smart contract is just a
Well put.
contract, a piece of code. And it says like, if Chris delivers a box of cherries to John, pay Chris a certain amount of ether, which is the native asset Ethereum ether. So that's the way to think about native assets of blockchain ecosystem. So a blockchain ecosystem is a network that has a shared distributed ledger, which is just like a series of entries of transactions. And if you make a transaction, you do that in the native asset of that ecosystem, and that's updated in that ledger. There are a whole galaxy of other things. So the one that has gotten a lot of attention recently is the tokenization of the dollar. So USDC, USDT, UST, USAT. There are a lot of different tokenized versions of the dollar. And so what does that mean? So there's been regulation around this. Congress passed a bill called the Genius Act, which outlines the regulations required to have a regulatorily compliant tokenized version of the dollar, and it makes all kinds of specifications as to like what the asset is, how it behaves, and what assets back that tokenized dollar. So you have to hold short-term US treasuries and be very transparent about that. So in any event, Congress basically made these things legal. And so now you can have a dollar of cash in your wallet, or you can have a tokenized dollar of USDC or UST or whatever it might be, that is compliant with Congress's recent legislation that allows you to transact dollars over blockchain rails. And so a lot of different entities are spinning up their version of Genius Act compliant tokenized dollars. The reason for this is that it's more scalable, right?
Mhm.
It's very easy to get access to this. It's more secure because there's a lot of cryptographic proof of ownership of who has the dollars, of who spent the dollars, who they sent them to. So it's a high degree of accessibility, scalability, security, and then it's just more efficient for all users. So when I do a transaction on Visa, right, it's a quote unquote digital dollar, but it's not a digital asset. It's still settling in the real world on physical rails. And it's like this Rube Goldberg machine of a bunch of different kinds of software and banking that have to interact with each other. And then they actually settle sometimes up to 90 days after the transaction
Yeah.
that you've made with your credit card. A lot of people don't realize this because this has been abstracted away from the user experience, obviously,
Yeah.
but it's still very expensive, costly, complicated, prone to security risks for banks, for any sort of financial institutions who are dealing on those legacy rails. So there are a lot of using these tokenized dollars that maybe the average consumer doesn't necessarily realize or have exposure to in their experience of
How the
using
sausage
tokenized
is
dollars
made.
versus right. But for the people who actually are making the sausage, this is a big improvement.
Yeah.
And so it's the way we always explained it at BlackRock is that it's like an order of magnitude or a stepwise improvement in all aspects and for all stakeholders. So it's just a much improved system. So those are a couple of those. But then, as you said, like the tokenization effort, people have probably heard this word of like real world assets tokenization. The chairman of the SEC and the CC have both spoken about this a lot. BlackRock's CEO, my old boss, Larry Fink, has talked about tokenizing basically the whole financial world. The current timeline from the SEC is to try to get to a place where we've tokenized all equities and bonds and all financial markets effectively within 2 to 3 years.
Yeah.
So basically within President Trump's term in office, basically
Yeah.
is the goal there. The reason for that is again that it's an order of magnitude of improvement, but those will be other versions of digital assets, right? So like in the old days, when you bought a share of Google or Apple, you would get a physical stock certificate, a bearer asset, right? But
Yeah.
then they were like, okay, we're going to have, the TCC is going to have a company that's actually going to own these and actually custody them, and you're just going to have the beneficial ownership rights, and like that abstracts away the risk of having to hold your certificate, but allows you to still get the benefits of investing in the company, right? So like we come up with this whole system again, super costly, super expensive, and a lot of sausage being made behind the scenes. Tokenizing all of these things, tokenizing the stock market, the stock exchanges, the bond markets, all these things, it increases, like I said, capital efficiency, security, scalability, accessibility, and validity. So it's a step towards continuing to ensure that the United States has the deepest, most liquid, most secure markets on the planet. Just a way to apply technology to move all of these different markets and all of these different systems into the future, into a more robust and scalable and accessible and efficient systems. That's what's happening.
Yeah.
There are there's a lot to that. A lot of different people are competing, like saying like, oh, my solution is better than yours. Like, like for example, JP Morgan called the Connexus system that they've built, which is a tokenized ecosystem, and they have JPM coin. And so like they have tokenized deposits for some of their
Mm.
customers already. And so like there's different people who are trying different versions of these things. And really it's not so much like necessarily competition exactly as people are prototyping to find product market fit, because
Yeah.
there's an enormous addressable market here, and whoever captures it is going to be well positioned,
Yeah.
to say the least. So there's a lot of different institutions, from asset managers to banks to nation states, and then just private issuers of stablecoins and so forth, many other things, digital active businesses, but they're all going to come out with different versions of these systems to support these digital assets. And there are an entire galaxy of things that could be termed a digital asset. So that's a little bit of an overview on some of that. I know
Yeah, I
that's a
love it,
lot.
man. It
Sorry.
was yeah, that was fantastic. Very yeah, it was I don't know if you could have condensed it down anymore, but yeah, so a token is really just a standardized digitization of a specific asset. And I'm excited because being in the real estate space, it's so inefficient, when you transact and do all these things, it's not liquid, you can't trade shares if you're part of a syndication. It's really exciting for some of the things that can happen out there if we can digitize it. I mean, Elon Musk says, like, why do I have to wait till the next business day to, have access or to send a wire? Like, why can't I send a wire 24/7? Like I can transact my Bitcoin 24/7. Same thing with stocks. It can be much more efficient when it comes to that. And I like that the U.S. is on the forefront of that. I think that the quicker we can do that, it's going to stabilize really the dollar as well over time. I know a lot of people have been concerned about the dollar losing its hegemony, its dominance in the world. Um, we're still what 70 some percent, 75% of settlement across the world. You can correct me on that number, but overwhelming majority with respect to that. Any thoughts on that?
Yeah, my dad always likes to say, if you're going to go up against the United States dollar, you better eat your Wheaties. And I think that's how I would still situate that circumstance. Look, I think you've seen
Yeah.
not a panicked response, but a stress response from China and
Yeah.
from the European Union and from other
Mhm.
markets like Japan about the risk of demand for tokenized dollars hurting demand for other global currencies, right? Because
Yeah.
the fiat system is, every country that has its own currency has a central bank that is issuing a fiat currency. And
Yeah.
basically, all of them are weaker in demand and in value retention abilities, or capital protection abilities, let's say. They're weaker than the U.S. dollar. So the
Yeah.
dollar has been referred to colloquially as the cleanest dirty shirt in the laundry. In the laundry. My friend Brent Johnson talks about this
I
dollar
like that
milkshake
one.
theory that, like, the dollar just drinks the milkshake of every other countries and every other currency.
Great movie.
So
Great movie reference.
yeah,
Yeah.
exactly. So what you've seen is a response by the European central banks, by the Central Bank of China, to try to quickly put capital controls, incentives in place to try to get users and capital to stay with their currencies as the United States starts to bring out these regulatory compliant digital dollars, because there's such a huge global demand for dollars. Secretary Bessent says that he estimates that by 2030, he said we could have between $3 or $4 trillion of tokenized dollars, of stable coins, basically
Yeah.
USD stable coins. That would be like a 10x from here, and I think we're somewhere around 300 billion. I'd have to look. So that's a huge projected growth from the Secretary of the Treasury. I don't know if that's actually going to happen or not,
Yeah.
but the point is that there's a lot of demand for dollars because it is the preferred fiat currency of the realm right now
Yeah.
globally. So we're seeing other central banks kind of react in a little bit of fear about that. Uh, and yeah, I think, like, I don't think that the United States is like at risk of losing that dollar hegemony,
Yeah.
but this move toward making the dollar more accessible, more liquid, and more scalable, more secure, it brings a lot of demand into our treasury market. It helps us fund our government. It supports the United States in just a lot of ways. And it's being viewed as a legitimate threat because the other nations know that it's true that there is a lot of demand for dollars. And if they allow that to come to market without anything to either, put capital controls to keep people in their currencies or incentivize them in some way to continue to hold those currencies, the gravity of the situation is just going to pull all the capital and economic towards the dollar. So I
Yeah.
think it advantages the United States to do this, and that's why you've seen bipartisan support on this. You can't get bipartisan support on anything in Washington, and there's still a lot of fights going on about crypto, about the stable coins. Everybody was kind of just like, yeah, we got to do this. So, and
Yeah.
that's, it's nice to see everybody get on the same team for once about something like that. So
Yeah, it
yeah.
is. It is. Like you said, it is. It is nice to see that there's something that has bipartisan support today, and do that.
We all still like dollars.
Yeah. So I want to expand on that a little bit. You see countries accumulating gold. You see countries now and companies accumulating Bitcoin. Talk about like why that is and how it supports this thesis or how it supports their position. And I think we've seen a big just in the past 3 years we've really seen this shift specifically with Bitcoin where countries and companies are actually starting their own Bitcoin treasuries.
Yeah. So there's a number of things driving this. I think a lot of people will point to the Biden administration's or the auto pen or whoever made the decision, Secretary Blinken, whoever made this call, Janet Yellen, whoever it was, decided to sanction Russia and put some, let's say, limitations on their ability. They kicked them out of the SWIFT system. They repatriated a lot of assets, froze a lot of their assets in their
Yeah.
accounts. And so they weaponized the dollar.
Yeah.
And I think that that was a shot across the bow and a
Yeah.
warning sign to a lot of countries to say, like, okay, if we're going to be trusting and depending on these US controlled fiscal systems, financial systems, we are not we're going to be exposed to similar sort of treatment. And nothing gets people's attention like threatening their wallet. So
Yeah.
you saw this global rise in an appetite for an alternative. Now the problem is that there is no global alternative to the dollar as a reserve asset that people trust more, that is issued by another government. So in other words, people are not going to start using the yen or
Yeah.
the ruble or the whatever it might be, the renminbi, right? They're not going to start using other central bank fiat as reserve currencies because they trust those governments even less and have in cases even more hostility between each other than they do with the United States. So the appetite for gold has grown significantly for that reason, not just among central banks but amongst people as well. Tether
Yeah.
is now one of the largest buyers of gold. Yeah.
Sorry, I love that. Yeah, Tether. Yeah, I just pulled it up. I was wrong. It's about 60% of the global reserve currency is dollar. Euro's second in about 20%. Yen's
Mm.
less than 6%. Pounds less than 5%. Yeah, so I mean, yeah, by a vast majority, the
Right.
dollar is leading the way there. But my apologies. You're talking about Tether.
Yeah.
Um,
Yeah, so a lot of companies and countries have started seeking an alternative reserve asset. Gold has been the main beneficiary of that so far, but as you've pointed out, a lot of other nations and companies have started to add Bitcoin to their balance sheet. A lot of them have availed themselves of the ETPs, the Bitcoin ETPs. So BlackRock launched a exchange traded product called IBIT, which gives people exposure to Bitcoin without having to custody it themselves. They have partnerships with other institutions to provide custody solutions for, but you can get exposure to Bitcoin. That saw the largest demand for any ETF for any ETP product in history. It touched, I think, 100 billion at its height, and they other products because there's just a lot of demand in the market for a ticker, an ETP, an ETF that people can trade out of their brokerage account that'll give them exposure to what they view as an asset that is kind of like heads I win, excuse me, heads I win, tails you lose. It's like if we're in a speculative environment and it's risk on, then Bitcoin performs well in the environment, but it's also a non-sovereign store of value. And so it doesn't have risks of, a sovereign entity or a nation state deciding to kick you out and possess your gold, right? So there's a lot of theses that go into Bitcoin and gold here, but I think that sort of that first moment of shaken trust and faith in the reliable access to these sort of US controlled financial systems and global financial systems is what kind of started that and has kicked off this major bull run in gold. I think there's still a lot of room to go for gold. I think you could see 6,000 this year and may even continue higher than that. But I also think that the thesis on Bitcoin is still very strong as well. But it's just which thesis is strongest at the moment, right? Because speculation has been the biggest driver of valuation on Bitcoin, I think, in recent years for sure. But then I also think that the debasement trade does benefit Bitcoin a lot, and the limited supply of that and the non-sovereign quality of the asset makes it attractive. And so different players, different nation states are going to continue to diversify into that as a capital and as a way to protect themselves. So we'll see how this plays out. But yeah, I think that there's a significant appetite globally for an alternative to the US dollar as a reserve asset and to alternatives to US controlled financial systems. But Bitcoin might end up being just an extension of that too someday. So we'll see how this all plays out. But that's sort of the state of play right now.
Yeah, very, very interesting. And as we've kind of alluded to through this conversation so far, John, and we were talking about this before the show today, we're seeing a lot of volatility in the world. As we're recording this, we have the tensions and the really the war over in Iran. We're seeing the price of oil go up and down. We're seeing a lot of volatility across all markets right now. Talk a little bit about volatility, what it means to the markets in general, and ultimately how your solutions are helping to solve some of those problems as well.
Sure. Yeah. So I did an interview with Nikki Shields, who is the lead precious analyst for a Swiss-based gold platform. And she wrote a research memo that said it very succinctly, which she said, conviction lies in elevated volatility across markets. And so I think it doesn't matter if it's the oil market, gold market, silver market, Bitcoin, equities, you can go down the line, right? Like I think I'm now even starting to see people putting in a bid on long bonds. People are starting to get desperate.
Yeah.
So I think, the volatility, elevated volatility seems to be where conviction lies for the foreseeable future here. I think that's going to continue. I think that as we get more liquidity, as we get more efficient markets, as we get more accessible markets, you're also going to see the rise of the self-directed investor, and more of this capital is going to move quickly, right? As
Yeah.
opposed to in the past when it was like slower and slower pipes, slower rails, less accessible markets, things were a little bit more muted, right? But now that we have more capital that's at play, in play, self-directed, and with fewer handcuffs and let's say less friction, you're going to continue to see this volatility be sort of the norm and the rule of the day. And that's kind of just where we are, I think. And I think that's going to apply to all markets in different times and in different flavors. How that plays out, Michael Saylor likes to say that volatility is a gift to the faithful. And so I think that if you have a longer term thesis to be able to look through some of this volatility and say, okay, my thesis on this asset is not a 1 month, 6 month, 2 month trade window, but rather a long-term position and a long-term expression of confidence in this asset, whatever that might be. Real estate, it could be gold, it could be Bitcoin. If you have that longer view and you're able to look through this volatility, it gives you an opportunity to not be panicked, not trade on emotion, not be scared, not be shaken out, and to accumulate, establish a position, and calmly build wealth. Because on the other side of all this volatility, the direction of travel, I don't think is going to be largely changed. Be not a straight line, but it's going to go in the same direction. It's kind of like one of those like serpentine labyrinth patterns that like it seems like you're not moving towards the goal, but you are, even if you're, going down when you overall going to go up. Bitcoin has been on exponential growth curves for a long time, and it's that trend is not broken. That market structure, that overall macro market structure of Bitcoin has not broken, and I don't think it's going to. What I would say is that our fund, TRU Capital, our position, our attitude on this is that we believe in the long-term investment thesis of Bitcoin, which is also a way of saying that we believe that there's no such thing as the dollar not continuing to debase. They're going to have to print more money. They're going to have to refinance the debt. They're going to have to continue to go into more debt. They're going to have to finance the war. These are the things.
Yeah.
We're $38 trillion of debt. We're going to get to $50 trillion of debt pretty quickly, quicker than people expect. And so you need a way. This creates financial repression, which means that you have to protect your capital. You have to find an asset to defend yourself. We think that Bitcoin fits that thesis for a lot of investors. Our differentiator here is that we don't want to have people incur the additional risk of custodying it themselves. I don't want to have to custody your Bitcoin, right? So I have an institutional grade custody provider with 13 years of operation and zero security risks and incidents. It's literally good enough for the president. He uses the same custody solution we do for his projects. But in any event, the point is that we also have this suite of algorithms that allow us to capitalize on the opportunity, right? The volatility is a gift to the faithful. We capitalize on the opportunities that the market presents us without incorporating human emotion. And I think that, a lot of people are talking about artificial intelligence as replacing hedge funds and trading. We use AI to help improve and optimize our algorithms, but it is not currently fit for purpose for asset management, for capital management, right? It is a tool designed for that. Now, someday, 5 to 10 years, who knows what that looks like? But for right now, the suite of algorithms we have are fit for purpose tools built, designed by professionals and optimized through AI to suit that need and meet that demand and serve the purposes we've set them up for. So that's the goal. There's a lot of people who will offer you. Now, it's just going to be a proliferating thing. JP Morgan will buy Bitcoin for you. They'll let you use it as a collateral asset to take a loan against. Anybody will sell you Bitcoin. Anybody will, we'll take your Bitcoin and we'll put it out in DeFi and take huge risks. And we're not going to do that. We hold all of our Bitcoin in cold storage and allow the algorithms to accumulate for us. So we don't take security. We don't move our assets out of cold storage. We don't fumble the bag. We don't open ourselves up to security risk. We capitalize on the opportunity in the market without exposing ourselves to pitfalls, to meme coins, to pump and dumps, or to our own emotions getting the best of us and letting us, go. And we're not using leverage either. That's another way people like to chop their hands off in the market with volatile like this. You can get an October 10th flash crash, and a lot of hedge funds are suddenly out of capital because they were long and they shouldn't have been. So we're not doing any of these things. The goal here, like I said, is to protect the capital, get through the volatility, using the volatility as an opportunity, and then outperform everybody. So that's the thing. Is like you could buy this, keep it on a thumb drive on your desk. You could let JP Morgan lock for you, could go to Saylor. We're going to outperform everybody. We want to be the fastest horse in the race with the highest amount of security. So it's kind of a long-winded pitch, but like we spent a couple of years figuring out what this looks. It's a non-trivial thing to set up
Yeah.
all these different pieces. It didn't come together overnight. It took us over a year to put it all together. But I'm very proud of the offering of TRU Capital. I think
Yeah.
it really makes a lot of sense. And I think that as we progress through this year and into 2027, more and more adoption, more regulatory clarity, the Clarity Act coming through, a lot of other things are going to bring more investment, more attention, more legitimization to the digital asset space. Bitcoin and other digital assets and funds like ours will be major beneficiaries of this. So it's onward and upward from here. And we're very patient, and we're seeing volatility and uncertainty as opportunity, and not panicking. So thanks for letting
Yeah.
me rant about that, Chris.
Oh no, it's great, man. That's why we have you on. You're just, I told, we were talking beforehand, John, with I love having other podcasters on because, you can, you don't just get yes or no answers, which is fantastic. I did want you to give an opportunity. So who do you work with specifically? Do you work with individuals? Do you work with companies? Who are your solutions built for, John? And what's the best way for people, our listeners, whether they're, part of a bigger company or whether they're individuals looking to, like you said, take advantage of some of this volatility, which I'm a big fan of. I love it when, I see Bitcoin drop, 5% in a day. It's like, hey, great opportunity to pick some up potentially, and do that. But, your solution is a lot more sophisticated than just that. So who do you serve?
Yeah, so we're willing to work with anybody who is a high net worth individual, family office, anybody who wants an opportunity like this and is able to meet the requirements of capital that we have. We have a 250K minimum, a 1 year lockup, and it's 2 and 20. Pretty vanilla flavor and structure for a fund. But that 1 year is important to us because we don't want to take a short view with our capital, and we don't want to be in positions where we have to get out of positions. Like the whole point of this is to take a longer view of the asset. The best investment I like to say is to buy Bitcoin 4 years ago. But the only way to make that investment is to buy Bitcoin and then sit on your hands for 4 years. So
Yeah.
so that's the for that is we want to make sure we are taking a longer view. I'm not interested in going out and trying to do a 50x swing trade on Bitcoin in the next 2 weeks to try to get investors capital. That's not my right. So that's basically it though, Chris. And it is open to anybody. And if you can't make that minimum check size, we can talk to you. And if we think it's the right fit and we want to partner with that capital, we can be flexible on some of these. But those are the kind of terms that we're setting out. And it's trying to be open to anybody who gets the thesis, right? Like I want to be accessible to anybody. But who gets the thesis and is willing to make that kind of capital commitment, that's the kind of capital we want to partner with. If you need like to get 8% a month, that's not what we're trying to do here. Trying to say like, okay, we're taking a long view and playing the long game, and we're going to win the long game. But we do want to partner with capital that has that same thesis. So that's kind of the parameters and the focus we're set up around. But other than that, we're happy to talk to anybody who feels like they might be a good partner for TRU Capital.
Yeah, I love that. Pick a long-term macro strategy based on, like you were saying, long-term trends, and then let the volatility be your friend as you accumulate and build your wealth along with that. John, what's the best place for our listeners to get in contact with you, learn more about TRU Capital?
TrueCapital.fund, and just reach out. We have a place on there. You can book a call with our team. You can email us directly. We'd love to talk to you more. I think, look, the other thing too, I think is I'll say on this, I have spent a long time in just media and content creation, education around digital assets. The biggest part that we haven't talked about our fund is I write research reports for the fund, and we do have conversations with our community of investors often. And we want to be an open book, be a resource. I think that Bitcoin is everything people don't like and understand about technology, combined with everything people don't like and understand about finance and monetary assets. And so we want to be a resource to go through partnership of education on this as well. So the education piece is important to me. I've written scripts for crypto YouTube channels for years. I'm hosting a macro podcast and a digital assets podcast to try to inform people about things. So, even if you don't think that this is the right fit for you, if you want to partner on this, if you want to dialogue on this, we're happy to talk to anybody, just because we think that the education piece is so important here. And I say this at the end of every episode of Milk Road Macro I do is stay safe, stay educated, and stay bullish. And so that's kind of the view of the fund we have, and we're just happy to be a resource to anybody who wants to talk more about this.
Yeah. I love it. I get your emails, great education. And yeah, whether you are in this space already or you're just trying to understand it a little bit more, check out TRU Capital. That's truecapital.fund. We'll have that link in the show notes. John, this has been fun. We're going to have you back on to continue to expand on this conversation. Appreciate your time here and sharing your wealth of knowledge with our audience today.
Thank you so much, Chris. It was a pleasure. I hope we talk again soon.
Oh, we will. Hey, Chris here again. I hope you found this episode valuable. Now, I have one more thing to gift you. We have a page for my coaching clients where you can get a free copy of my book, as well as much more from previous guests on the show. Just check out nextlevelincome.com/coaching to get a free copy of my book, audiobook, and much more. I'll send you a copy of my book and cover all the shipping costs as a thank you for listening to the podcast. Also, please like, share, and take just 90 seconds to give us a rating on Apple Podcasts.